So I was an institutional portfolio manager and managed money for these really big foundations, hospitals, trusts, municipalities, hundreds of millions of dollars. And they'd have an investment policy statement and it would say, whatever, again, I'm 50-50 stocks, bonds, and in that 50% stocks, I want 30% in the US and 20% international, or whatever the numbers are, right? And then based on being bearish or bullish on a particular sector or what's going on in the world, we might make a change, right? If we thought stocks were going down, we might underweight stocks. If we thought the US was going to do better, we might overweight the US relative to international, but we would go overweight by 3% or 2% or 5% or something like that. So we were using our best judgment in order to put into play views on what was going on, but we weren't making wholesale changes. And the reason we didn't make wholesale changes are because we realized that it's impossible to accurately predict the future. We realized that uncertainty is always there, right? The only people that have seen the end of uncertainty in their lives are dead people. The world is uncertain. It's always the case. 1962, we had the Cuban Missile Crisis, right? Kids were hiding underneath their desk thinking that was going to save them from nuclear Armageddon. Russian generals had orders to fire nuclear weapons at the United States if U.S. troops set foot on Cuba, right? So we were that close to nuclear holocaust. The Dow was at like 400. Today it's at like 35,000, right? So there's been a lot of uncertainty in that time back then and in the in-between, and yet markets have persevered. The people that have profited are those that have stayed invested, maybe made small tweaks along the way. The people that have suffered are those that are getting in and out and making wholesale changes. And so the biggest mistake I see people make are having too much conviction in their views, whether that's fear or greed. The biggest change for that, and the easiest change, is to have an investment policy statement, have a written plan in place based on your required rate of return, and then invest appropriately. And if you have a view, maybe put it into action, but in a small way. Don't make a wholesale change.
Are you prepared for retirement? Schedule a free financial assessment with an experienced financial professional right online at purefinancial.com.